Hey everyone, welcome back to Corporate Decoder. Today, MYLT just filed an 8KA with a shareholder vote update, and I am seeing one huge detail about their future stock grants. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company held its annual meeting, and most importantly, it seems like they got shareholder approval for their new equity plan. This filing is an amendment to a previous report. They are just correcting some technical errors in the tables for proposals 23 and 4. Nothing majorly new here. They are just cleaning up prior information. So this is about Marblegate Capital Corporation, and the main event here is the 2026 annual meeting of stockholders. The big takeaway is the approval of the Marblegate Capital Corporation 2026 Equity Incentive Plan. Basically, this is a plan for giving stock options and other awards to employees, consultants, and even directors to keep them motivated and aligned with the company's success. This plan is pretty standard stuff. It allows for things like stock options, restricted stock awards, and other bonus payouts tied to company performance. They can give out up to a certain number of shares, and there is a yearly automatic increase to that pool of shares for a few years, which is called the Evergreen provision. This is designed to make sure there are always enough shares available for future grants. The plan itself is managed by the board of directors or a committee of the board, and they get to decide who gets what and when they can actually receive it. The plan also has some protections built in for existing awards. So if the company does something major like a stock split or a recapitalization, the awards will be adjusted to reflect that. The board can change or end the plan, but they need shareholder approval for some things, like increasing the total number of shares available, or if they want to lower the price at which options can be exercised, which is called repricing. No awards can be given out under this plan 10 years after it starts. Now, let's talk about the actual voting results from the annual meeting that happened on the 11th of June 2026. There were about 73.9 million shares of common stock outstanding at that time. The good news for the company is that almost all of the votes were in favor of the proposals. For the election of directors, for example, Harvey Golub got over 68 million votes in favor. The other directors also saw very high numbers of votes for them. Regarding the approval of the 2026 Equity Incentive Plan, which we just talked about, a massive 68,319,635 shares were voted in favor. Only a small number, 292,663, voted against it. This shows strong support from the shareholders for this plan to reward and retain key talent. The company also asked shareholders to ratify the appointment of Deloitte and Touch LLP as their independent registered public accounting firm for the year. This also passed with overwhelming support with over 69 million votes in favor. Finally, shareholders approved the idea of being able to adjourn or postpone the meeting if needed to gather more votes. This is a procedural safeguard to ensure all important matters can be properly addressed. Again, almost unanimous support here. This filing also includes the actual text of the 2026 Equity Incentive Plan as an exhibit, which is Exhibit 10.1. The report is signed by Michael Hutchby, the Chief Financial Officer, on the 12th of June 2026. When we look at this filing, the main story is the strong shareholder approval for the 2026 Equity Incentive Plan. This is really important for a company like Marblegate Capital, especially given they only have 16 employees. Having a robust plan to grant equity can be a powerful tool to attract and keep talented individuals. It suggests the company is looking to grow and needs to incentivize its team to achieve those goals. We saw huge support for this plan, which implies that the management strategy for employee compensation and long-term incentives is well received by the shareholders. With this plan approved, management has the green light to use future stock grants as a key part of their compensation strategy, which can be crucial for smaller companies that might struggle to compete with larger firms on salary alone. The overwhelming yes votes on all proposals paint a picture of a confident shareholder base that trusts the current leadership and their strategic direction. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Check out the Discord in the description.